And this is John Wilson. He's been with us for a long time, successful options trader. And hi, John. How are you?
Hey, pretty good, Dr. Locke. Thank you.
All right, that's awesome. So you've set up a PowerPoint for us, and I think that's awesome. So let's what do you got going on?
Yeah, let's see. Yeah, you can see me right here. Okay, perfect. So yeah, this is kind of a guidelines, and some of these slides, folks can come back later, right? We don't have to spend too much time, but I like this. It keeps us. It keeps us not working off like tangents here.
Well, how you been? How you been dealing with the pandemic? And you've been trading okay?
Oh yeah.
Yeah.
Well, it's funny because I mean, I'm working as a financial advisor. So what I'm saying is not, I'm a disclosure. So yeah, we're work for a financial advisor. We don't do any options. It's all.
I'm not, but you are. So that's good. And
that's right.
I'm not a financial advisor, but I have financial advisors who actually listen to me. So that's pretty cool.
Oh, that's actually, I'm impressed. I mean, yeah. Well, I guess I'm one of them. Yeah. So I'm not sure any financial advisors in the Locke community, but I started about a year and a half ago. And just because after about 7 years in my basement, I wanted to get out and help folks. So I've been doing that. Love it. It's different. It's totally different. But I've learned a lot of folks, they don't want to deal with this. And so I'd rather help them.
Now, how were your customers during the big crash there this year?
It's all about just education. I mean, you get the whole gamut, especially up here in the Rockies. We have a lot of tourism, so they've been hit hard, that group. But everybody's up this year. But it's just, I guess, set expectations. I mean, you don't, if they're retiring, they need the money in a year, you don't put them in Tesla. Well, actually, it would have worked out well.
That would have worked out pretty well, wouldn't it?
It would have worked out great. But no, you know what I'm saying. Yeah. So we try to keep it simple, but I mean, we kept our offices open. But at the end of the day, it's great because, I mean, I'm in Canada doing the Canadian markets. I mean, we do outside Canada too, but we're allowed to trade, US, and options are not, we can't do options up here. So at least where I work. So it works out great. And help folks out and then I just love the options world. I'll never stop doing this. Yeah. Right? You too, John. We'll be doing this when we're 80, 85, 90.
Yeah, we'll just keep doing it. There's no reason to stop, right?
Exactly. I might be a little more risk taking by then. But all in all is going well. Thank you. Too bad I missed last year. So enough of looking at my ugly mug here. Let's go down to the next slide. Here's my disclosure. Very deep. I usually got, some lawyers. This is John Wilson's opinion. Trading is risky. If you follow what is mentioned in this presentation, you may lose all your money and find yourself living under a bridge. That's not healthy for a marriage. So enjoy it.
I've heard adversity brings you closer together. So maybe it is good for a marriage. You don't really know.
Maybe it is. How about yourself? I didn't ask you. You and Sherry with the lockdown back in March and April?
Yeah, I mean, we're fine. We work from home anyway, so it wasn't that big a deal. And we got our Florida fix in before the big whole thing came down. Good. And we got, we were back here. But yeah, I mean, I've been kind of bummed out as far as we're not getting out and doing stuff, and a lot of stuff's closed. But everything else is fine. So
right. Yeah, no, it's good. It's interesting. Because we're up here in the mountains, so all the trails they were closed, but how can you stop people walking on trails? So,
exactly.
I mean, but Banff closed. You're not allowed to get into Banff at all. Banff Lake Louise. They literally had people turning cars around.
So, that's interesting. They had some spots here if they think they closed as well.
They closed it. Oh, okay.
Yeah. Walking out in the woods is going to get you COVID. I don't know, but I don't understand the logic behind that, but you never know. It's the same thing we had. I don't know. Did they do that in Texas? They closed the restrooms. They closed all the public restrooms, and then they put porta potties out in front of them.
Is that right?
So yeah. So I actually have a picture somewhere. They took the public restrooms, all these areas, and they closed them. And then people whined about it, so they put porta potties out there. Porta potties, those little porta potties, and I'm like, those are cleaner than a restroom. I mean, how does that work?
Man, that's interesting logic. Okay, those are my boys from Texas thinking it through. All right. And speaking of that, well, we'll get to Texas in a second about Steven. So hold on a sec. Yes, we'll keep going. Yeah, couple of ideas to keep us in line here. Keep me in line in my idea. Message for a struggling trader. Some words of wisdom from John Locke. what did I learn in 2020 and 2021, which is right around the corner. Thank goodness, right?
Yeah, I know it. We got a vaccine coming out. Everything should be better, we hope.
Oh yeah, lights at the end of the tunnel. Here we go. Oh, I was like, okay, what are all these thoughts that I went through over the last 8 years? I started trading options around summer 2012, and I just like threw out some thoughts, from I'm useless to, I literally cried over a trade to, this emotional roller coaster. I killed it this much. I got it. I stare at my screen all day long in my basement, and go on from there. And then at 6 p.m. Eastern, or 4 out here in Mountain Time, where's the ES? Every Sunday, always looking at it. And then I'm like, Tasty Trade, John Locke. I'm like, Jekyll and Hyde. What's my style? What do I do? Tom Sosnoff, John Locke. Who should I date? And then follow the plan. Everything will work out. So emotional roller coaster. So
I think a lot of people go through this, right? They come in here, and I think the expectations when you get into options trading is it's easy. You go in, you open an account, you make money, and I'm going to go out and make $1 gazillion, and everything's going to be fine without any real effort, right? So
yeah, I heard the advertisement on CNBC that said, call this number, right? Yeah.
It did, yeah. CNBC told me that. So
that's right. It's true. So, I mean, obviously some of these are more in the, they'll pop up every now and then, but we're human. But
when we talk about feelings though, John, interesting thing, right? So we just went through this huge crash or whatever, or how would I say, a lot of people, when they lose a trade or they draw down for a month or something, they kind of freak out if they're actually options traders. But then they'll have, I don't know, $1 million in their 401k plan, and that'll go up and down 250 grand, 500,000, and they don't even think about it.
Exactly. Right. Yeah. So that's decades down the road. Yeah, I don't have to worry about it. Right.
Right. But the logic behind it, and that always has baffled me, because I mean, they're so concerned that they drew down a little bit, but they're doing better than their 401k did. And I mean, it's like, what's the real big deal? And I think it's just because people attach so much meaning to losing a little bit of money or not winning a trade that it becomes detrimental to them.
It's true. And it's funny you mentioned that, because as an advisor, you're trying to set expectations with a client, based on the risk tolerance time frame. You're just trying to say, hey, do you understand the market goes up and down? When do you need this money? So, but we don't do that with options. I think it's we want to win every month. At least I'm guilty of that.
Oh, I am guilty of that too. Yeah. Well, especially when we're first starting, if you're not like ahead every day, you even break it down to every day, right? You watch the money every day. If you're not like ahead every day, you think, oh, something's wrong. I'm doing something wrong, and there's a problem with that. Right?
Yeah. Forget every month. It's every day. Exactly. Right. Yeah. That's well said. So here we go. So what's the vaccine to my little disease here? Or what was the remedy? We got Sherry, Steven, and John. Added some little color. Sorry, Steven. Yeah, I made a Mongo from Blazing Saddles, so I got to give him I'm from Dallas originally. He's from Fort Worth. I gotta do that.
We should have Steven on now.
Exactly. Oh, he's gonna say, "Come on, man, why that?" But I tried to give him like a cowboy, but no, I made a Mongo. But yeah, this is what helped me as a community. For the folks, I mean, I'm just looking at the numbers in your community, John. They're growing, so you must have a lot of new folks. And I'll just say, hey, whoever is in the community now, you're very lucky. I went to like an Invest Tools in fall of 2012, and some random person mentioned you, just randomly. So
that's funny.
Yeah, how lucky am I that I heard that? I sat down next to that person. So who knows where I'd be today. But yeah, so you're in the community. It's helped me. And then obviously the back testing and journaling, kind of showing my mindset, like what was I thinking? And some of it's rated R, I guess. Some of the words I
can't imagine that.
That's right. Like, what was I really thinking? But that helped me, right? To go back, maybe also cleansing the mind, get it out, release. But yeah, if you're in the John Locke community, you're in good hands. So that's helped me get through all these little, I guess, verbiage that we all go through, right? So
Yeah, I
and
mean,
it's
we all
work
have
in
these
progress.
feelings, and I think people think that because I'm the teacher or the instructor that I don't go through the same thing. And the reality is you do go through the same thing. You go through this. I mean, it's just human mind.
Yeah.
It's the way that it works, So you just have to
So
deal with it, learn to work with it.
Superman even has a little kryptonite. Nice.
A
Okay.
little bit.
No, we're all human. We're all human. And I think it
Yeah.
makes it better too, because we work together. I guess the word feel, and that's going to go into my next topic is add the E there for John Locke, a little bit of a, so let's unlock the toolbox. And so I'm referring to the John Locke toolbox. And so what I did here is I took your trades. These numbers are on your website, and I just went back to 2014. Some of them go further, way back. So try to
Yeah,
keep it simple.
and you did this
Yeah.
kind of like at Hawaii. Where were we? In Orlando as
Right.
well, right? And we did that. We did
Exactly.
that demonstration there. Yeah.
Right. Exactly. I didn't go back to October. I didn't add November, so it's not
Yeah.
up to date fully, but it's close. And
Sure.
on the average, I took, I did a sort. Obviously, the rocks at the top, and the bull would actually be higher. But if we added 2013, and I think November is a great month, so
Well, we've had a couple of really tough years in the bull trade. So
yeah,
and understanding why that was a tough year for the bull trade and not tough for the Super Bowl is an interesting journey in itself, right?
That's it. Well said. And look at these. Look at the 2019 and compared it to the Super Bowl and bull, right? And in 2020. But yeah, that's interesting. And but one thing, when you look at these numbers, a lot of folks will say, "Oh yeah, okay, which one's the highest? Okay, let me ask a little more. I want that one. Yeah, it's like on a menu. Okay, I want the dessert first. But let's then you might say, well, that's more complicated. I'll go to the next highest. That's probably easy. Just work your way down. And my
Right.
advice to folks who are struggling is feel the trade. You know what a rock trade feels like when it's 2 days expiration, and what does it feel like? Can you do that? I mean, put yourself in that situation, right?
Exactly.
So right, because it's a little different feel when it could be a hot tamale. So, but it's amazing. Obviously, look at the results. So anyway, that's I'll explain what
That's
I
just
trade.
been a fantastic strategy. Yeah, for sure.
Oh, it's been, I don't know what year did you discover the strategy? I have to ask you.
Well, I put the strategy together back in 2011, or 12.
Was that right? Okay.
Yeah.
So you went bearish butterfly. Of course, you changed that a couple times. M3, then rock, because you had to add those two first for the rock, right?
Right. Well, see, the M3, realistically, the program didn't come out till 2011, but we've been trading it within the community that we've had, which was extremely small early on, right? But we've been trading that since 2007.
Oh, okay. That's a long time. I didn't
The
realize
bearish
that.
butterfly actually came after the M3 was my method 3, right? So the bearish butterfly came 6 methods after the M3.
So what was method 1, John?
That was an expanding butterfly expanding into a condor.
Really?
Yeah.
Okay.
Yeah.
I was trying to think of your condor trade you took off. You had, remember that? I forgot the name of that.
We had a V condor,
V condor,
super simple spreads, which I don't like that strategy actually that much, but people wanted one, so we stuck a condor out there.
Yeah, back then. Yeah. Okay. Yeah. No, it's interesting to hear. To try and go look behind the curtain a little bit. Okay.
So the rock trade's really been around. It's actually an M17, what we would call it. It's a variation of an M17 or an M18, if I was to give it the designated name. And what I tried to do is with the strategies, with the M3 strategy and the other ones, is I was trading a certain way back in, I don't know, 2007, 2008, that was a bit subjective.
Okay.
And I tried to create a process where people could learn to trade that way. And ultimately, that's the M21.
I was gonna say you went a little too advanced too soon. It sounds like
Right.
Yeah,
In other words, it'd be almost impossible to teach people what I was doing back in 2007 from
with no foundation
with no foundation of anything. Right. You'd have to do that. So I'm thinking, well, how do I get people to M21? How do I do that? And first is, I said the Bearish Butterfly just happened to be the first program, but their first official program. But my thought was take them to an M3, take them to a Bearish Butterfly. There's different skills that you learn in each one. Take them to a rock trade where you add additional skills to that, and then bring in the technical analysis and stuff and the market opinions and go into the M21.
Yes. Okay. The logic at that time going through. Okay.
Yeah.
It's interesting how it evolves, right? I mean, heck, 2005, you're already doing options, right?
I didn't even know what an option was in 2005. So
talking about, oh my goodness. Yeah. It's interesting. Yeah, this the game of life.
But that goes to show you how quickly you can advance in this.
Right.
I mean, I was doing well. I learned in 2006. I was doing well in 2008. It was a fantastic year for me, and the market had done things it's never done before. So
yeah, and 2020 is probably one of your best years now. Over
2020 is my best year I've ever had. Yeah.
Excellent. Yeah. No, it's a great year. This is a good year.
Yeah, it really is.
It is. You have a very unique year. So what I was going to tell, so folks see this menu, you're in the restaurant of John Locke. Okay. So you have this menu, everyone is seeing this. I kind of put it, and I was like, all right, how can you help someone out? And this next slide's pretty, here it is. Okay. There's a lot going on here. So I just recommend someone that you just take a picture and just move on. But the point here is if you have trouble, you saying you want to win every month. Well, put 2 trades where one will somewhat, maybe not lose, but will not do as favorably. And I put an arrow here, because these are my favorite. I love the version 22. I love. Oh,
that's interesting. Series. The V22 Super Bowl. Okay, yeah.
Yeah. So those are my 2. These are great trades. Well, V22 does great.
It usually does well. It usually does well in downtrending markets, like
right.
In certain implied volatility situations, like we had a fantastic stretch with that in, I think March, April, May, or June, and then it kind of fell out of favor again. But the Super Bowl, comes right back in, right?
It just comes back, right? So if you put them together, it's those are pretty solid numbers. As a matter of fact, my question to folks: look how many red years are on there. There's not a lot of red. I made these, you can see like the first one for version 32 in Bearish Butterfly was 50-50. So I did it really quick, like half and half. Mm-hmm. You need to look at your loss parameters and maybe the rock, you need to look at, I just kept it simple here to try to.
Yeah, sure. Just give some examples. Yeah, great.
Just give some examples. No order on the average on the right. It just threw it out there. It just having folks find 2 trades, maybe one's bullish, one's bearish, keep it simple and put them on, and it teaches you to lose. So if you have any trouble trying to win every month, you will lose maybe 1 trade, but look at the results. They're pretty solid. So I thought that was kind of nice to just throw some, it helped me out because of my back testing. I was like, hey, I could do this. That's kind of my default right here versus being more subjective. I prefer to be subjective. But
well, like I said, that's one of people's biggest challenges is being able to see a losing scenario within their trading, right? I think a lot of our types of traders, they come in, they get away from directional trading because they can see the loss potential in the trade. So they come over this and then they try to pretend there's no way that they can lose. And then when they do, they're shocked. It's like, well, no, all trading's that way. I mean, it's a game of chance. Right. So
no, it's true. It is a game of chance, but this is a great menu. I mean, these are solid. So, I mean, just on behalf of the
this is coming from a financial advisor. Solid.
No. Remember the disclosure. We don't want to live under a bridge yet. Yeah.
We don't want to live under a bridge though. So I'm sure don't do that.
That's right. No, these are great trades. Yeah. Can you imagine though, as an advisor, can you imagine like, I don't know, 80 different accounts and you're sitting there trying to do the options trades for each account? Oh, it'd be crazy.
Oh, that would be crazy. Yeah.
Yeah. It would be pretty crazy. But no, at the end of the day, the Super Bowl trade, which you designed, I think that was in Florida, right, John?
I did that for Florida. We did that in the Trading Transformation Workshop. We designed a bunch of trades, and the funny thing is, the Super Bowl, it's so simple. From a statistical probability standpoint, it should only win 40% of the time, but it wins 85% of the time, which is actually I think that is actually the highest win rate probability strategy in actual live markets as any strategy we have.
See, who would have guessed? That'd be interesting to put the win rate in one of these columns. I'm curious. The Super Bowl would be higher than most of these you're saying.
Yeah, it's definitely, the bull wins about 75% of the time historically. In actual results. The Super Bowl wins about 85% in actual results. Most of the other stuff is between seven, an M3 is in the 70, is just about 80%. M3 is about 80, a little over 80%. If you want to compare some other strategies, like a Rhino is about 80%. It's about the same as the M3. You almost get identical performance between the two. But that's
UB1. I didn't put that in there, but
that's fine. But as far as win rate, that is the highest win rate strategy that we actually have.
Who would have guessed that? That's pretty good.
Which is crazy.
That's crazy. No, it's illogical if you think from really just look at the options chain. It has this percentage. It just doesn't seem
I like to look at it now and say that it points out how wrong the typical beliefs are of traders, options traders, when they come into the marketplace. They're very, very off for the most part, which is why so many people have trouble. Doesn't seem logical.
Right. Interesting. That's logical. That's the word. Yeah, we'll move away from that one now. But yeah, so my approach, I don't know if it's logical, but I love the X4 series. The 22 and 17, solid. I love the SPX. It's funny because I used to be a big M3 trader, but once you presented this, I've been doing this. That's all I've been trading is the X4.
Awesome.
For the most part, right?
And we have a path in the X4 too, trying to get you into being more subjective trader as well. It's just doing it with the SPX and a little bit differently.
Right. Exactly. Yeah. So you have the frown world, high skew, flatter skew. There we go. Higher vol. We're kind of in that now. We might be on the fence. We're jumping over. We might be changing soon, but we'll find out. But yeah, the last 9 months ish have been.
It's definitely been insane from an implied volatility standpoint.
Insane. Yeah. And you talk all about that. Look at the price of a fly. Look at the look at the back hump and all that. But yeah, so. When today's world, it's basically the 22 or a version of a broken wing butterfly, 22-ish. And the other one is version 17. And I use about a 5-to-1 ratio with a rock to 17. I think you would say 4-to-1 because the loss ratio, right? So, but that's, you keep it small. So that's on the steeper skew days, which it seems so foreign, but you have to go to the batting cage. So as we're getting closer to these steeper skew and lower volatility in a smile world, I'll have to go back and back test, get my version 17 in rock world, my mindset back on, because it's been a while.
Well, right? That's the thing. Yeah. And it would be good to go back and test some of those markets, because what happens is people, they either modify or adapt their strategies or create strategies that tend to do well in this environment. And then when it switches back, they have no idea what's going on.
Right.
So the first thing you should have done when the market started crashing is going back and run some back tests back in 2008 and 2011 crashes and stuff like that. And you could have been a lot more adaptable, a lot more quickly, because you kind of get used to it. Like you said, you practice a little bit.
Yeah, exactly. August 2015, Q4 2018. You got these moments where you got to and that's in my little arrow here. You'll see it says, "What's your go-to trade when everyone's running for the lifeboat?" So it's you start to see it's a nice little uptick, and you see a bar goes down February 24th, 2020. It's a Monday. You get a big down bar. Should I jump on the lifeboat yet or not? So what's your trade? What's your go-to? Is it buy a put? Is it is it jump into version 22? So everybody should, at least that's helped me out. I have my lifeboat trade, and which is I'll jump into.
I see what you mean by that statement now. I was kind of wondering what that meant, but you're just saying when the market starts to fall apart.
Yeah, or it's going. Maybe you're in a version 17. I'm in the lower tier here, which the steeper skew world.
That's the advantage to get into the subjective trading, right? Because we can have expectations. We can set up our expectations for what the market should do. And then when all of a sudden it's doing something weird, like you get a big range expansion like that, and maybe you drop down into a different trading range, right? And I look at the trading ranges as zones, right? And if I drop down into, if I start to get a very large movements very quickly down into the bottom here, then I'm cautious, right? You might want to protect that support level at that point. And then if it breaks that support level, now you're trading in a new zone and you have new conditions, and you're going to need to evaluate that and do that.
Adapt, yeah.
But if you're in a 17 and you see that, you break that zone, you know that's not going to be good for 17, right? Or at least it has the potential. So we drop out of that. We go into something else.
Yeah, that's great. You explained it really well in your presentation about the M3-4U and using, I think you use a calendar. A couple of,
You're right. Yeah, calendars are good in very certain, in specific circumstances. They can be very, very effective. Yeah.
Yeah, that was nice. But that's kind of like, what's everyone's, I call it a lifeboat trade, like, to keep you.
Right. Yeah, what are you going to
do? When the Titanic is sinking, you have to jump on a lifeboat. So,
and that can be cash too, right?
That could be cash.
Yeah,
exactly.
You better keep that in mind. There's nothing wrong with being out of the market if you don't understand it.
Exactly. Right. Yeah. Right. I think that's what Black Peer, they sometimes jump out.
Well, that's what he's doing now, right? He's
that's what he's doing now.
As soon as he sees, well, last time I talked to him anyway, right? So Ryan is, people who don't know, he was one of our past successful traders. You can look at his stuff. But yeah, he's basically looking for early signals the market might reverse, and he's hopping right out. I mean, there's disadvantages to that also. I mean, you get in and out of the market a lot sometimes. You get chopped in and out. But yeah, it's...
Right.
It's you can do that, and I'm kind of doing that too, but I'm waiting for a more defined signal.
Okay. And it's also, you can say dry powder or what have you, whatever the term. But that's, I just wanted to share a little bit because I like to, the tools you've given us. There's some great tools.
But you should think about that. What are you going to do when things start to fall apart, and how are you going to identify when things start to fall apart? If you know that, that's a great advantage as a trader.
Right, and at least be consistent to your, with your plan, right? So when you think, because we'll be wrong. When you're wrong, okay, that's fine. And readapt or reassess, and we go to the next one. Words of wisdom. Okay, there's a lot here. I'm not going to talk about all of them, so because there's too much. But I like the one in red, and I got this from your podcast on Alpha Mind. And
interesting.
I love that. I think I listened to it at least 3 times. So there's some great nuggets. The one I like, which is very helpful, is visualize your trade going against you. Kind of a glass half empty approach. How does it feel? What action will you take? I'm a glass half full person, but when it comes to trading, I try to be as negative as possible. What does it feel? What could happen in the market if we get a big down day, like you say, maybe 40 points in the rut falls or 100 in the SPX? Feel that. What does it feel like? I mean, not just what does it look like, but I want you to, like, are you going to freak out or feel that? So I love that advice. So thank you.
The challenge is most of us, we think about winning and we don't think that the trade can lose. So we overtrade, right? We put too big a size on because we're not fully aware that we may lose that trade. So we start to size up more than we probably should. Then the trade goes against us and we're shocked. And then we're shocked, so we can't get back in the market with any size because,
we're paralyzed.
Now you're scared, you're paralyzed, right? And you can't get back in the market, and then you miss the opportunity that usually follows a loss. And you just run into this cycle where it's just really hard to make money. And by visualizing this loss, you can, helps you trade the appropriate size. If you lose, it helps you understand what you're going to do afterwards, how you're going to feel about it, and stuff like that. So it's just a lot of good things there.
That's good. And also try to learn too. So the next time you're building that inventory. Yeah. So when you recognize that environment again. But yeah, so there's other good stuff in here. Great podcasts. So I wanted to share that with the group. Yeah. One takeaway 2020 is, I really started to trust myself in trading in a sense. If it weren't me and it were someone else, I could tell my wife, hey, if something happens to me, you can go to John. And so I just really trust myself. It has nothing to do with the money. It's just, you see VIX going from, what was our low? Was it even 11 in January? I can't remember the low.
I think it may have come down to 11. Yeah, it
was like to 85 in a month. That's a big. That's
not like a pandemic to bring a VIX to 85.
That's right. Nice healthy pandemic. Wow. Yeah, definitely. Clean everything out. So that helped me out. Try to keep things very simple. which is actually good for commissions. I'm not over trading, but yeah. So that was my big takeaway for 2020. A lot of, I guess, more psychology.
Yeah, I mean, it's really big thing to trust yourself, and trust yourself, not that you're going to win every single time, but trust yourself that you are going to get out of the market when you should, or adapt when you should, and you're trading a good size and stuff like that. It brings you confidence.
Well, and here's an example. I was watching Monday. Today is Thursday, the 10th of December. I know we're recording this. So on Monday, you did your weekly update and you went over the M3. Well, the M3 last week, I think it was down $1,500 on a 10 lot, and then it popped up 16 up 1,600.
Right.
That's a $3,000 change. So my point is, be patient, right? These things work out, right? You just got to be patient. All of a sudden, the money came in. It popped up the tent. Yeah, I just thought that was interesting.
And if you're freaked out because you're drawn down, right, $1,500, and you do something foolish, then you'll probably lose that trade instead of just kind of following your rules.
Right, following your rules, and then the market will have a tendency to come. Yeah, but I thought that was interesting. Yeah, trust yourself, trust these little toolbox we have. In 2021, yeah, same thing. Trust. You got to follow the process. I try to look at the P&L number 2 here. If it's up or down. This is, I'm not like a Zen, keep smiling at it. I'm trying to just, okay, when it's up, don't celebrate too much. When it's down, don't kick yourself, right?
Yeah. Well, one of the things we talk about Ryan, right? And we had to do a brain hack for him. He might talk about that. I think he talked about it in some of maybe his past webinars he did with us, but he literally covers his profit and loss. He doesn't want to see it.
Like a black tape, just puts it on.
Yep. Huh. Until at which point it makes a difference, until it hits its loss number or whatever. Until then, he doesn't want to know what it is, right?
Wow.
It just because it affects his trading too much.
Yeah. We are human.
It's just a mind hack. And my mind hack is when I put on a trade, I take the maximum loss mentally out of the account in my mind. And
so say that again. You take it out. I mean,
so if I have say I have $100,000 in an account and I put on a trade with a $5,000 exit loss trigger, that $5,000, I see the account as a $95,000 account, not a $100,000 account, until the trade is closed. And if I close the trade and I still have that $95,000, I've won.
Wow. Okay.
Because that is my plan. That was my process. That was what I did. Now I'll give myself a little bit of a buffer. It'll be like 93,000, but that's the point. Is I don't consider any of that money mine. As soon as it goes in the marketplace, that money at risk is not mine anymore. It's not mine until I get back, right? And it prevents me from, watching the profit and loss every day and all this other stuff. I just kind of trust what's going on.
That's a great hack. Thank you.
Yeah, that works for me. So everybody has a little bit different, but
it's easier than putting black tape on the screen. Messes up. No, but that's I like that.
Well, there's a lot of things you can do, right? And it depends on the person.
It's true, but I hadn't heard that version. I like yours. It's good. And also, speaking of Black Peer and Ryan, they had a presentation recently talking about the relationship between theta and vega, and this is more for low volatility. If you go back to 2017, throw in a bearish broken wing butterfly. Excuse me.
Right.
I thought that was interesting. There was a lot of risk in some of these because of the vega. So I never really looked at that, the vega. So I'd love to hear your perspective, but it's
interesting because you take an M3 trade now, for example, has a $50,000 planned capital. These days, you're rarely getting more than $15,000 in the trade.
Right.
You go in a low implied volatility environment, you're fighting to keep that thing under 50 grand. So there's a difference, right? There's a difference in that way those two trades are going to react. And one of the things you can do is you can change the size of the wings, for example, and you can drop them down to make that trade essentially a smaller trade. And that's also going to affect your theta vega relationship, and you can do that. Now, how effective that is as far as results, well, that's up in the air, right? That's a question, but you can certainly do that, and it'll make the trade easier. Because one of the things that people don't understand is trading was actually more risky in February of this year and January of this year than it is now.
Right.
than it was in April, for example. It was much less risky in April than it was in January, and that's because of the low applied volatility environment. It's literally harder to make money in those environments.
Yeah. Well said.
Yeah.
That's one of the reasons why I was like, might have to go back to the batting cage, because this low vol, it's been a while, right? We haven't traded in that environment. It feels a little awkward. We're used to these very cheap butterflies. And the other thing I was going to say is Super Bowl. I think you mentioned it earlier in this presentation. It's just such a great trade, and I like it to keep so a little bit systematic. I'm very subjective, so I like that Super Bowl have a little systematic.
It's not going to do well in a sideways or down market. So, I mean, if it's not volatile, right? So, but it's very good
or
in a sideways market that is very volatile, or an uptrending market that's even very volatile. So,
yeah. And then obviously the rock trade is a great trade. And I mean, it does well in any environment, but for my style, I like to include it in the low vol world. But so, and that's it. And this is the fam at Lake Louise this is last year, actually, last Christmas.
Oh, that's cool.
Those are my girls. But
I'm going to be next to the pool near Christmas. So.
Yeah, you're going to be in Florida. That's right. Hey, we're going to be in Florida. Where do you go? Where are you?
We bought a place right near Disney, so it's like 3 miles from Disney. So,
oh my gosh, yeah, that's great. Great.
Should be fun, yeah.
Well, you're doing it right. You're doing it right, John. And I mean, I want to say thank you for at least helping us out. I mean, helping the community, helping my family. I mean, this is great.
That's awesome. We're so grateful we were able to help and be a part in your journey with trading. That's awesome.
No, thanks, John. I appreciate it.
Thank you.
But the rest of the group, I wish that we all could get together one day, but that'll happen.
Yeah, we'll have another group event. We'll have some fun. We got to get everything to open up, though. I'd like to do it without a mask on. So
that's right. We should have had our. Yeah. Very true. We've been Zooming. Everybody's been Zooming. But thanks, John. I appreciate it.
Thanks for coming on. Thanks for sharing your experience with us, and I hope you have a great Christmas and a great year.
Thanks. Appreciate it, John. All right. Hey, Take care, everybody.
Take care. Bye-bye.
All right. All the best. Bye.